GTii almost meeting our implied target from yesterday's analysis. Now, when can we expect a bounce? Let's go ahead and go over those details right now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTii technicals, raw price action, and statistical thread of analysis on this fine hump day, Wednesday. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's dive right into the charts. Okay, so we're going to start off with the higher term time frame analysis, and this is going to be on the 5-day chart. This is the chart that we were talking about yesterday regarding the descending channel that we're currently that we're currently above, and we implied the potential of coming back to test our newly converted resistance into support, since you can see here that this is a massive green candle that we have in the 5-day chart, and we have not come back to do so just yet. So there are some important, very key targets here that we need to go over, as it does give us some clarity into the downside. Okay, so first of all, we do have the 91 cent support at the 2.618. Regardless of the fact, we still have that support at about 96-97 cents, and our low of the candle from today actually went down to 98 cents. So this 98 cent low isn't exactly what we were talking about. Okay, if we're talking about nuance here, like incredible detail, we did talk about a potential 95 to 97 cent touch here, and this candle only reached down to 98, which means, and typically means, that we're not done yet. Okay, and potentially this could pose a type of short-term, very short-term liquidity trap. Okay, so another important area to notice that is actually the 200-day simple moving average, located at about 80 cents. Okay, so this is absolutely an area of interest as well. So now we do have a box of well, I mean, the box, we can call it a box of support, right? So we're going to go ahead and do this, or a range of support. And now we can see that the potentials of us dropping into this level here, finding a bounce and reclaiming the outside of our descending channel, the likelihood is great, okay? But we must play the play as it goes, okay? Because this candle here does have 5 days to close, and literally anything can happen here. So as soon as we do touch this bottom, I expect a pretty significant bounce to the upside, and we would then have to validate our newly converted resistance of the descending channel into a brand new support yet again before a continuation to the upside. Okay, so all in the descending channel line, this top trend line of the 2.618, and the bottom trend line where the 200-day simple moving average all will serve as a type of support before continuing on, and can likely be a very important area, or a point of inflection. Okay, so now let's move on to the next chart. So this is going to be let's go ahead and take a look at the Crypstex indicators. So this is the ARC-Series, and in particular the DBSI indicator. Okay, so which is an indicator that takes a score of every single candle printed throughout the asset's particular time frame, in this case the daily chart. So every single candle is counted, and it gives us a value, and that value is actually a strength score, bulls versus bears, and it is displayed right up here as a percentage. So you can actually see that the bulls are at a 6% control, while the bears are at 94%. Okay, so this is very likely facing a continuation to the downside per the ARC DBSI indicator. Okay, so now let's go ahead and load Armor just to see if it has anything different to say. Let me block the visibility of DBSI and the 13-day moving average. Okay, so DBSI is still, Armor is actually still suggesting a long signal, and it has not printed a bear signal just yet on the top. You know, the tag would actually appear right above, just like this here. Okay, so yeah, in this case, we are still suggesting upside, but please remember that I'm still forward testing this indicator in the upper term time frames. So I wouldn't hold as high regard as I would as DBSI in this particular instance. Okay, so yes, we're still being suggested an upside. Let's go ahead and now, okay, here's another thing, you guys. My apologies for stuttering like this, but if you are interested in acquiring these indicators, they do come in a package of about 8, and they are all these right over here. Okay, so all you have to do is send me a DM, and we'll go over the subscription packages for you to learn how to acquire these. Okay, and please know that the subscription package packages for the indicators are not the same as the TradingView subscription packages, as TradingView is just it's the software, it's the platform, and Crypstex are authorized retailers within that TradingView space. All right, so now let's move on to the next chart. Okay, so this is going to be the statistical side of the analysis, and I am mentioning this right now because we are going to be facing a change in momentum versus volatility fairly soon. And I say this because in about 23 hours, 22 hours and 59 minutes to be very exact, the 3-day candle will close. And from there, we will start a new chapter on this path and find out what's going to be happening. But the pivot is still facing towards the upside on momentum, and we are still at critical volatility. So upon the continuation to the downside, volatility will likely get even hotter and momentum will then shift. Okay, so I can't actually say if it's going to be up or down, but this is very important for us to consider. Okay, so now let's move on to the next chart. Okay, the statistical analysis, I mean, we made a 253% move to the upside. I have to still validate to see what's going to be coming up next upon the closure of this next 3-day candle. Okay, next chart. All right, so we were touching on the possibility of making an inverse head and shoulder, which is just another pattern that I don't really like to call out, but since it's relevant and since it's here, we might as well just take a quick look at it. So the idea of the inverse head and shoulders actually came from a massive cup that we talked about a few days ago, saying that the potential of missing this is great, because the cup and handle has a very low hit rate in general. And as you can see here, it really does. I mean, that's not to say that this is not still a cup and handle. It's I mentioned the possibility of making the other shoulder based on the lows of these prior candles here from November 30th, November 29th, and November 29th all the way through here. So the candles have reached, a very similar level, but I still do think that the area of about, let's see, the low of this candle here being at about 89 cents to about 92 cents, that area is absolutely relevant, and it has a lot to do with the support that we have right down here, located at 81 to about 91 cents. Okay, so it does fall in line with what we're talking about thus far, and then we could evaluate that potential bounce and move to the upside, since we do have like a macro scale inverse head and shoulders here. Okay, so the targets upon realizing an inverse head and shoulder are still the same. I can't guarantee that we would get there though, but we would just need to play it day by day. So the top target would be around between the 4.618 at $7.80 and the implied or the projected target top of $9.07. Okay, so that's still, I mean, if this does play out the way that it should be psychologically speaking, then yes, that target would essentially be now not recommended, but it would be in the scope for us to just take a look at and consider within the probabilities. Now let's go ahead and look at the divergence chart as we are continuing our descent based on these bearish drives. Okay, so what you're looking at here is divergence. So divergence is the opposition of price action versus momentum, and momentum in this case represented by this indicator RSI, relative strength index. Okay, so we did notice that we had 3 drives of phantom hidden bearish divergence, and that usually happens when price action is making a series of lower highs and a series of higher highs in the momentum. Okay, momentum higher highs, price action lower highs. Okay, so you can see that they're right over here, and we are in fact honoring the downside of those. Okay, the 12-hour RSI is still suggesting a continuation to the downside, and it is approaching a very critical area of the particular positioning from the RSI signal, which is the purple line. Okay, the 14-day moving average, simple moving average, is the pink line. Okay, as soon as we do move below that pink line, which has already happened, it usually presents a bearish outlook and a continuation to the downside. So it is in accordance with what we're talking about. For a continuation to the downside, potentially lowest target around 81 cents, followed by a bounce. Okay, so that would still be the lowest target that I'm seeing, since the 200-day simple moving average is located right below. All right, so now let's open up a multi-pane so that we can gauge that true edge for tomorrow's session. All right, so yeah, wow, this is very interesting. Here we go. Okay, so now we're going to do it from this chart. My apologies, it was not on that chart. I was already ready on this one. All right. Yeah, so we're looking good. Let's go ahead and load up the 30-minute just like we always do, and make sure that we do have our diagram up so that you can focus in on these 4 zones as they are located right over here on the live chart so that you know exactly what I'm talking about. So the 30-minute immediate short-term time frame is sitting in the grips of the bear strength percentile. It is suggesting an upside continuation, but this is likely to be lived out pretty fast. The 15-minute is also suggesting an upside, and like I said, these are micro time frames, so they're likely to play out in the early session. All right, so now the bi-hourly time frame is suggesting a slight bearishness, and now the moving average located above us is obviously bearish, and it's suggesting a downside continuation as well. It's not strong. It's not so significant like this pivot right over here that we faced December 28th to about literally all of December 28th was a pretty steep downhill, and that downhill has significantly adjusted or it has now pivoted down to a way to where it's suggesting more of a sideways trading event. Okay, so as long as we do maintain ourselves within the shallow areas of this bear strength percentile, the likelihood of coming right back up and bouncing in this area is great. Okay, so now the 6-hour time frame is suggesting absolute sideways trading on the RSI signal, 14-day moving average giving us a slight hint that there could potentially be some more downside to be looked at, but however, it does look a bit corrective. Okay, so now the daily time frame, since we already saw the 12-hour on the divergence, we're noticing here that the pivot is slowing down as well. We do have the 14-day moving average below us, which can serve as a point of support before a bounce to the upside. Okay, but the daily time frame, the bi-daily time frame still has some downside to go. The moving average below us can serve as that support line before a bounce. So the distance between here and here is pretty large, and that is what's leading me to believe that the 81 cent, 82 cent level is more relevant than not. Okay, so the 3-day time frame is still suggesting some downside. It has used the 14-day moving average as a form of resistance, and as you can see, we are now back into the deep areas of the bear weakness percentile, which usually means we'll face that gravitational pull right into bear strength. Okay, now just for giggles, let's look at the 5-day. So the 5-day is suggesting an upside continuation, and the moving average is below us, so that's pretty good. And now it is the 5-day time frame is attempting to reach the very let's see, did we look at the 5-day here or here? Okay, my apologies. The phone over here distracted me. ARCa is gonna just give everybody the wrong news. So the 5-day time frame is suggesting a continuation to the downside, however, not aggressive. The 14-day moving average is suggesting that downside continuation as well. We are pretty much in that deep area here of the bear weakness percentile, which only means that gravitational pull into bear strength is likely. Okay, so there is still overall. It's still overall pretty bearish. Okay, so the move down to those levels could be a slow move. Okay, it may not be a capitulation type of event, which actually would be the best thing for us, so that there's no panic selling. Okay, so upon this bounce here, we can face the resistance from the 2.618 and the newly converted resistance into support. Okay, but it's still I'm talking about still within the same candle. As you can see here, 4 days and 23 hours. It's an eternity for this candle to close. All right, so I think this is going to be it for the video. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I can't suggest for you to buy or sell any assets, okay? I need you to do your own DD and everything will be just fine, you guys. There's no problem there. All right, but yes, with that said, I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.